All right. So kind of a slow week. Right, what we had analyzed on Tuesday, I believe, was the fact that, I don't know if this was on Friday. Actually, it might have been Tuesday. We had analyzed the scenario where we had a failed reaction and a variant of structural disruption, which is what led us to the inclination that we are still going to continue lower. It did take a bit. It did stall out for a bit for one. It gave a fake reaction for two. However, at the end this morning, we actually got the full reaction that we're looking for. And as of now, right, well, before we get to as of now, I do want to recognize this here. I do want to recognize this. Why? Because it led into a bearish liquidity grab, which ended up whiplashing. So because that whiplashed, I don't necessarily favor the continuation to the downside because of the failed reaction, which, you know, you could then try to imply something like that. Hold on one second. Ooh, my bad. So because we have the internal whiplash, the internal failure to continue lower, that inevitably caused us to pretty much lead price into the immediate liquidity point, which would have been here. That's this reaction coming into here. So now, because our bias is still technically the same, we can now imply a bearish liquidity grab based on where we are now. Right, and now whatever happens here is going to be very, very crucial, because there is technically two relative areas of interest, which is here where the change of character happened, and then there's also a potential POI up here. So I am still, you know, leaning towards that bearish bias, at least for the medium term, right? And then after we release this move, then I do want to see how exactly we react down here, because we've already seen signs of potentially seeing the move not be supported as a whole and starting to see weaker moves to the downside. So the reason why I'm very, very interested in seeing what happens here is because we could also be seeing, right, a bullish sweep, and we start seeing more higher pricing. And the only reason why we can assume that is because, right, the major intraday, the swing is still bullish. So it's going to become very, very interesting here over the next 2 to 3 weeks, because whatever happens here within the next 2 to 3 weeks is really going to dictate whether we're really going to continue higher based on overall structure, or if we're going to fail and actually give us a very big bearish move. So this would be the continuation in terms of major intraday swing. This would be the reversal, right? But that would, you know, only be signified via an internal structural disruption, etc., etc., etc. So as of now, I am favoring the bearish liquidity grab. Why? Because we had a bullish transition here, which led into X target, and then we had a bearish conversion, which is the bearish liquidity grab here. So I'm still favoring that downside. EURUSD wasn't the prettiest, but just like I said with DXY, we could potentially be seeing a weaker move towards the upside. If we see a weaker move towards the upside, then it's a lot harder to justify that reversal instead of, you know, the immediate continuation. So as of now, right, we've already mentioned the potential accumulation here. However, what's very alerting as of now is only the high bullish volume, right? Low momentum reaction. So we're seeing that basically converge and could potentially be just another form of liquidity grab, which gives us lower pricing, which would go with the potential reversal bias here where we don't get a confirmed reaction in our premium of our internal minor intraday range, and could dictate upward movement. However, now that we're seeing this just from a momentum stance, just from a minor intraday stance, I still can only favor the continuation towards the upside. Why? Because let me actually delete some of this stuff. This stuff ended up working out. We already talked about that. Let me see if the 2 hours better. Yep, it is. Right, so we have a bullish reaction. We have a bullish reaction, and they have low momentum to the downside. Just from the raw stance of a minor intraday structure and momentum POV, we can assume that this will continue higher. Only because the reaction created a solidified low, and this internal scalp range would then therefore, or minor intraday range would then therefore be, bullish from the internal stance, right? Which would incline more to bullish movement. So as of now, I'm still relatively bullish on this. The only thing that I think can really change my mind here is if we clear liquidity, right? Those aren't equal highs. I know that that's a liquidity grab up here, but if we clear previous highs and then we get a model, that would then support the potential bearish bias in terms of bearish transition on bullish pullback of a bearish trend. So that would be scenario one. That would kind of be the one that I would really prefer the most, just because we can only make assumptions based on previous consequences, and we know that we are bearish as a whole. So who says we can't reach our bigger POI down here? But at the same time, if you want to talk like that, then we also have to assume that if we're going to continue a bearish sense from EURUSD, we're going to continue bullish sense from DXY, and we've already covered why this could possibly still be extremely bullish, and why we can potentially even come back for previous highs up here. So it really just depends on what bias you're trying to follow to see how we're going to transition into either a new high or a new low. That would bring us to AUDUSD. This one I think we did get right from a minor intraday stance. Yeah, we did. Right, we pretty much had covered right, the potential accumulation, the transition from a volume and structural POV, and we had assumed that based on where price was, we would reach a type of discount. And the only reason why I noted here is because this is kind of where the change of character is. You can see that there's momentum here internally. There is a stallment of price there. So technically we almost reached it, but the bias was intact. And in my opinion, this one is looking a bit more bullish than the other ones are looking bearish, or the other ones are looking bullish, I'm sorry. However, I don't really know where we are going to be playing off of. The only thing that makes sense to me right now is we have an H4 inefficiency candle internally there, which would also support the bearish conversion on a bullish pullback of a bearish trend. And if we zoom in internally here, we can see that just based on the POI alone, the reaction is already confirmed, not only from here, but from here. This would be continuation BOS. This would be reversal BOS from a scalp POV. So that has solidified the minor intraday range, therefore being here, right? So whatever happens here is really going to dictate whether we're going to continue higher or lower. But I'm not too convinced on either one. I don't like how choppy the candles are here. Everything looks choppy, everything looks efficient, and it doesn't necessarily give me an inclination as to why we could continue higher, at least as of now. Yeah, everything looks very efficient, tons of wicks. So if we do clear, our previous low here, that would be a confirmed liquidity grab. excuse me, and you could easily start to favor the continuation to the downside. So that would pretty much conclude today. Nothing, like I said, nothing too crazy. Everything kind of stalled out a little bit this week. But that's good, because whenever we see weeks like this where we just stall, that means we're bound to see a relatively big move within the next week or two. But let's see, 10 people on today. Do you guys have any questions today? How are you guys doing? Hopefully I don't sound sick or something, because my nose is super clogged up this morning. Yeah, go for it. Show me some examples. If you guys have any topics you guys want me to bring up, we can always bring them up. Okay, is that all? Is it just those three? Okay, last one. Okay, let's start from the top. Let me zoom in. There we go, they all zoom in, cool. All right. Okay, so we know we're bearish from a swing, from major intraday. I solidified the range that we just mentioned. Something I don't like about your chart here, bro, is your chart is like, do you see my chart where you can have, there's a ton of candles in my chart? Your chart is kind of like this, very horizontally, and it makes it harder for me to read the range personally. So that's just one thing I don't really like. I would more so do this, have a more clear image of the chart for one. Yeah, because like, for example, I can't necessarily see what's back here. We know that we're bearish, but if you were to move this way, you could probably see that this looks very corrective, you know what I mean? Yeah, you see that looks a lot better. And if you can then just zoom into this relative area while keeping that same zoomed in POV, then I think you can see the chart in a lot much better perspective. Yep, it looks a lot better. It looks a lot better. This looks a lot better than chart number 1, which would have been here. I think this looks so much better. You can see a lot more of the chart. You can actually see the direction, and I can actually critique you here. The only thing, this is something that I've noted over the past couple of weeks, where Well, actually, from an entry standpoint, it makes a lot of sense where you necessarily have a bearish trend and you have the continuation BOS, and then you look for the bearish conversion, and that makes sense from an entry standpoint. I see this happen a lot. However, whenever I see this with a bias perspective, it doesn't necessarily sustain itself every single time. Why? Because the moves are bigger. The security of a BOS from a major intraday swing is going to be much more probable in comparison to an entry model. So whenever I see the BOS here, that shows to me, right, that we have an internal liquidity grab. The momentum has shifted. We can obviously see here that we have a big change of character. Therefore, once we're seeing the corrective move backwards, it is not necessarily as quick as the previous move before. So when I'm seeing low momentum, I would more so look for a scenario here, right, to then give me a move higher, at least just for the short term. But that's just from a bias perspective. If you were to do this from an entry perspective, I definitely see you having much more success with that. But just from a bias standpoint, these breaks of structure are definitely very crucial because of the structural level that they're in, which I would more so consider this a major intraday, just depending on what time frame you're looking at. Right, because let's say, for example, let's say you have the BOS, you have the movement to the upside, you have the corrective structure in terms of a bearish pullback. You now even have, you know, a bullish liquidity grab that aligns with this here, and then you have the discount here, and you have relative, you know, areas of interest. This would make a lot more sense to me. Why? Because you're trying to correlate swing with a scalp, whereas here it's a major intraday, right, and a scalp. So at least for the medium term, you know you will get the reaction. Maybe you may not get the biggest move in terms of an overall sense, but the probability of you hitting that major intraday target is going to be much more higher than in comparison to a scalp entry via a swing bias. That's why the internal structure really matters a lot. I hope that makes sense. From a major intraday, you transition into a bullish sense, meaning your swing is solidified. However, you don't necessarily know if your swing pullback is complete yet. Because like I said, you can definitely catch these transitions from an entry stance. Whenever you're actually in here, you can definitely see stuff like that because it's in alignment already with, let's say, your swing, excuse me, it's already in line with your major intraday swing perspective. But when you're actually trying to develop the bias, then, you know, it's a lot harder to justify those continuations based on a overall swing when the major intraday just became bullish. So you have to give this time to also transition so that then the major intraday is converting into the swing bias, and then you can find those continuations internally to get higher probability scenarios. I don't think the issue is that you try to correlate swing with scalp. I think the issue is you fail to recognize that, and I think you did not recognize the internal structure. Because you might get the direction right, you know, over time, but you're taking trades based on a scalp scenario, so you obviously need more data than just the swing bias, or else you're just picking highs and picking lows. You know what I mean? which is fine, but you have to correlate the internal structure, because that internal structure is what composes your swing bias. So I would say it's I would say more so it's like a timing issue. I wouldn't necessarily say it's a swing with scalp. Cool. Does anybody have any questions? Cool, I'll give you guys like a minute, see if anybody has any questions. If not, we could just wrap it up here. Cool, no questions? Awesome. All right, guys, I appreciate you guys for coming on. And we will continue on Tuesday.